Hello, my name is Ian Mote. I'm the country manager in Shanghai, China for planning and finance. One thing we see a lot in the market here is we see a lot of startup businesses and SMEs looking to try and find financing to help grow their businesses. It's not easy at the moment, it's a challenging market, and there's a lot of different influences and reasons that may hold them back. So something we want to discuss today is a little bit about what they can look for, some ideas, some suggestions, some things to avoid, and to try to take people through the different options available to choose the one that's best for them. Now, there are many different reasons for startup companies to have problems, and I won't go through all of them, but the top three I always feel. Firstly, you run out of money. It sounds simple, but a lot of startups don't really plan effectively their cash needs for the forthcoming years. They don't really control their money properly. They have lots of ideas and lots of great plans about what they're going to do. But at the end of the day, if you run out of money, the business will come to a fairly quick halt. So to control, manage, predict, and keep a close eye on the money is an absolute necessity for all small businesses. The second is about having the right people in place. It's very easy to have a lot of ideas people, a lot of creative people when you have a great idea for a new product, but you need to make sure you have an operations person, a legal team, a finance person. It doesn't always have to be separate people, you can have people combining, but you need to have these avenues covered, and if you don't, you can open yourself up to a lot of problems in the future. The third, I feel, is a lot of people set up their businesses with certain ideas and to create an opportunity from a certain market condition, but what you then find is the market changes. I'm based here in China. We see this a lot from the rise of social media. WeChat, for instance, has changed the landscape in China beyond all recognition in the last few years. If you're not ahead of the game and you can't react quickly, you can have a dominant market position one day and then very quickly it evaporates and you're left behind. So as fast as you're trying to put into place your plans, you need to be flexible to make sure that you keep adapting them for the future as the way the market changes, because it almost certainly won't change the way you expect it to. The other things we see, some small businesses focusing on a perfect product, what they think customers want, not what customers actually want. A great example we've discussed here is someone like Airbnb, who, when they were very small, the founders used to go and visit their customers and talk to them about the experience that they had. By doing this, they could fine-tune the product, listen to the customer feedback, and get the product exactly right for their customer base before they scaled. So once they scaled, they had the product in place. They did this because they listened to their customers, they met them, they talked to them. They didn't assume what the customers wanted before they even started. And that ties into the second point about not really understanding the market. If you think you know where the market's going without really understanding that focus and without those changes, then you could be in trouble. The last couple of points go back to the management issue. Having the team around you, having the right people, not trying to do everything yourself, not trying to cut corners. If you have the solid people with solid financial backing, you're on much better ground than trying to miss out on any of those points. If you look at the different funding methods for small businesses in the last couple of years, personal funding is still the main dominant driver for a lot of companies. If you're a startup, that's going to be the way you're going to get going. From your own money, from family, from friends, just to get you off the ground. And if you can do that, then you can prove you have an idea that can work. Once you have things moving, once things are starting to show that the idea has merit, then you can go out and look at some of these other issues, these other avenues to try and get those money from those sources in order to really grow the business. What I'm going to do, I'm going to go through each one in turn and just give a little bit of the pros and cons and help you come to your own idea about whether these are going to fit for your requirement. The personal finance I mentioned, firstly, it shows confidence in your business. If you don't have your own money in your own business, that's a red flag, and investors are going to be nervous about that. If you have family and friends support you, a lot of the time they will be more forgiving and more patient maybe than some external investors right at the start. But the downside is that those funds are often very limited and you can only use it at the start, but once you get going, that's not going to get you where you want to go. If you look at bank finance, it's great if you can get it, but it's not easy to get. Banks are not well set up to lend to small businesses in Asia, I feel. There's a gap, particularly here in China. There's a lot of retail business, there's a lot of corporate business, and that gap in between for SMEs doesn't fit very well. They have very set products like asset-backed or balance sheet-driven products, and that's all there is. If you want a customized solution, you want a unique solution for your business, it's going to be a struggle to get the banks to provide that. What's great if you can find them is an angel or a high net worth investor to put money in early in your business. You can be much more customized. There's much more opportunity for people to listen to your idea and to really help support what you're trying to achieve, and maybe lend some experience and some knowledge of their own towards you. The downside, it can be harder to find and harder to convince them. These people tend to see a lot of ideas come past them. They're very experienced people, been around the market a long time, so you have to work doubly hard in order to convince them that your business and your idea is better than the other ones they've heard recently. There are different ways to do this, and I'll talk a bit about the pitching and the ideas in a minute, but also you can use an advisor, someone who has connections into them, can vet and help you develop your idea and develop your pitch before you go and see these people. Chances are you're going to get it one shot. So you want to fine tune it, get it practiced, get it perfect, so when you go in and see someone, you can really give it your best effort to get the money from them. Obviously in Asia generally, and certainly here in China as well as Singapore and Hong Kong, there's a lot of private equity money, a lot of venture capital money, and they're looking for investments. The only thing I've seen, particularly in the market here recently, is that they've become more and more focused. The economy in China is not as strong as it was. There are some great areas and then some weaker areas, and so somewhat naturally a lot of the money has tended to concentrate on those areas that are showing substantial growth. If you're a tech company, if you're a biomedical company, then great. But if you're a retail company or if you're a more old school manufacturing company, it doesn't get people so excited, which is not to say you don't have a great idea and a great business model, but just trying to get through that first stage can be much more difficult. But if you can get through and you can really impress people, then you can have a lot of support and a lot of money come behind you very quickly. To the point that in the last couple of years, if you look at venture capital investments in China, there's a lot of money, a record number of money has flown out in the last couple of years, but at a lower number of deals. I'm trying to match up why this was. It's because they're chasing success. They want to see some success first before then they can come in. So once your idea has shown some traction and shows that you have real potential, then the venture capital companies will come in and really help you grow to the next level. But that doesn't help so much at a Series A or earlier stage, angel, seed round, to really get you off the ground, and that's a bit harder to find at the moment. Something that's become more interesting in the last couple of years is the crowdsourcing. There's different aspects of this, but the microequity has been an increasing share of the market. There's quite a few different sites in Singapore and in Hong Kong and here in China, each of them dedicated to trying to help small business get off the ground. For this, you need a really good idea. You're pitching to members of the public, so maybe the execution aspects, the nitty-gritty, the numbers are not going to be quite so important. What you're going to do, you're going to have one brief pitch where you can sell an idea and people are going to say, yes, I want to be a part of that. And if you can do that, then you've got a good opportunity to be successful. Funny enough, one of the industries that's been most successful in this area is craft breweries making beer. There's a lot of beer companies that tapped into this because they get a lot of brand loyalty from their supporters who like the beer and like being part of trying to grow that brewery, to the point there are now dedicated crowdfunding sites just for beer. So that's just one area where if you can tap into that customer loyalty, then you can get a lot of support very quickly. So whichever aspect you're looking at, you have to ask yourself, are you ready to pitch? How can you make that impression? You're only going to get one shot. I won't go through each of the points, but what you've got to convince people about more than anything else is first that you really understand your business and you've thought of all the different things that could or might happen. What's the worst could happen, and are you ready for it? Are you doing everything, or do you have a good team around you? Do you have experience? Do you have the money? If you have some money, what are you going to do with it? What's your plan? If these investors come in, then what happens? Do you have an exit strategy? All of these things are questions that people can ask, and you need to, even if they're not in the deck, even if they're not in the pitch initially, you need to have them in your mind, because if someone asks you and you miss out on any of these, then that investor is going to be nervous and it's going to lose confidence in trying to support you going forward. When you are in that position, and if you do have a successful pitch, then you need to think what you want to ask for. Do you ask for equity, which is going to be more expensive to you, but leaves you a less short-term repayment issues? Or do you go for debt, which gives you more control maybe, but it's going to cost you more in the short term in terms of repayment and impacting on your cash flow? Or, as we're seeing more and more popular recently, do you look at convertible notes, where the money comes in as a loan, but you agree to convert to equity, maybe at Series A rounds at a discount to the valuation there. So you can come in, put your money in, and you have the chance to claim it back unless it goes to Series A, in which case the money will turn into equity, but you have a discount to the value. That's becoming more and more popular. It gives a bit of flexibility on both sides. Once you've decided the structure, the two points that I always stress people: firstly, take more than you need. If you've got a plan that says you need $200,000 to run your business the next year or so, take $300,000. Firstly, because raising money takes a lot of your time, and if you can get the money you need and have a safety net, then you can spend your time running your business and not chasing around trying to find investors. And secondly, that safety net is vital, because if you do run out of money, all your plans go out of the window and you have to go into emergency mode. So even though it costs you more money in the long term, in the short term, I think it's worth doing. And secondly, on the valuation, don't get carried away with the valuation early. If you go high too quickly and you do get it in, it puts more pressure for the next round, it puts more pressure on growth prospects, it puts more pressure on you from the investors which are seeking a return. At a seed level, at an A level, does it really matter? I don't think it matters that much. I'd go low, go conservative, keep everyone happy, keep pressure off, and then you can spend your time growing your business and really trying to do what you want to do, not keeping your shareholders happy. Just to finish up then, the main points I feel: cash is all important. Okay, make sure you don't just have enough money, you have more than enough, and you know what you're going to do with it, and you know when you're going to need it. Depth in management will protect you and really help you cover all bases. Get good people around you and pay more for those. If you raise that money, you can spend it on the good people who are going to really help you grow your business. Focus. Know what you're looking for, know what market you're in, know what your customers want, and don't worry about the rest. Concentrate on showing that you can grow your product to a substantial level very quickly, and then the rest will follow from there. And the final, execution, execution, execution. That's what investors are going to want to see. Every pitch deck has a great idea. Everyone's got a market that they can see needs improving. None of the markets are perfect, but if you can't execute it, that idea is worth little. So prove you have that execution, and then the money will follow. It's just a little bit about me. If you want to get in touch, feel free to contact me in any of the forms showing on here. I'm on all the social media as well. Anybody in China or in Asia wants to talk to me about on this aspect of raising money, happy to have a conversation. It's not easy out there at the moment. The markets are tough, but there is plenty of money around if you know the right people to ask, look in the right places, and you have a really well thought out business plan. Thank you very much.